Welcome to Wise Beyond Bitcoin, your home for the crypto neo news, education, and opportunities, plus your macro updates. My name is Ryan.
My name is Lucas. Speaking of macro updates, let's get right into it because this is a theme that we've been following for quite some time since I guess we've been talking about the Fed's move to raise interest rates since last year and what that would mean for liquidity in the crypto markets. And we'll continue to cover that so people can, be aware of, the future, the macro long-term outlook of how it will affect crypto, blockchain, and other markets as well. But the question is, what are they saying and what is being said?
Yeah, I mean, if you're following the Fed and you know that there's some mixed messages that have been coming out as of late, and you know how important messaging is if you follow our channel. Sometimes, the way expectations are shaped with language can be as important as actual policy changes. So let's take a look at what they've been, what's the Fed saying, right? Let's get an eye on that. So on the 2nd of August, we hear that from the federal chairman Bullard that rates will have to be higher for longer if inflation remains a problem, right? If inflation continues to be a worsening problem, if it doesn't start to cool off, then the idea is we'll have to have higher rates for longer than what was expected. And then the very next day, we get word, another Federal Reserve official says that depending on the data, right, depending on inflation and employment data, there's a potential, and it's reasonable to expect a 50 basis point rate hike coming in September instead of the 0.75, which we've been accustomed to. So, and clearly this is all data dependent. I'll show you the passage there. It's gonna be based on what's going on with inflation, what's going on with employment, consumer spending, and economic growth in general between here and there. So yeah, mixed messages. Is it going to be a lower rate hike, or are we going to have to go higher for longer? I mean, the Fed doesn't seem to know exactly. And I guess that kind of speaks to how complex this issue is, right? I mean, we're not talking about simple questions, but what should the price of money be over time to equilibrate supply and demand so there's not excess demands that can't be expressed because there's a lack of money, or not too much money that drives up inflation and restricts restricts investment because of costs going up and things. So there's like this fine little balancing act where demand and supply kind of meet each other and are in harmony. And how do you figure out what that number is, right? I mean, it's a big job.
And how do we read between the lines and understand what's being said? Because as we mentioned, we follow this language in this speak, and we'll continue to share the understanding. And basically, the whole point is to kind of create confusion, a little bit of confusion in the market, because it continues a prolonged sense of optimism of things are continuing to look. They're okay, and that way, if people do if they do feel it's important to raise rates, it's met with kind of an optimism. We talk about good news being bad news and bad news being good news. That's another narrative that comes from the Fed frequently. If they say, hey, look, the job market's very, very strong. Well, before all this rate hike business happening that started going on, that would have been great news for the stock market, for the economy. Everyone would be celebrating. Look at this strong job market. But in this world that we've been living in, we've explained this, so we'll mention it in this video again and again every time. But why do people see a correction in the market, like you were mentioning, I think, before the video you were showing? But the reality is that if you come out with good news right now, what's going to happen? Why is it that when good news comes out about the job market or inflation, why is that potentially bad news for the next rate hike?
Well, it's counterintuitive, but it's really just a fact. It's because it speaks to what's going on with inflation. So when inflation, we're trying to figure out what's inflation going to be over the next month, quarter, 2 quarters, 3 quarters, a year, and so you're trying to predict the future. And one of the ways that you can take an understanding of what that's going to be is looking at the labor markets, right? Because when there's money to be invested, and there's, you know, sentiment that there's growth coming, right? And these things tend to go up with inflation, because inflation is a product of people spending money, and so people spend money when they're optimistic, and so if you see there's a lot of hiring going on, that tells observers that there's demand that's in the labor markets, and that it tells you that there's enough, that there's a force, that's a factor that drives inflation. I mean, to make it simple, when there's more jobs being created, incomes go up, and when incomes go up, people have more money, and when people have more money, they spend more money, and when people spend more money, that causes inflation. And if inflation's a problem, then it's kind of counterintuitive, but the best way to solve, one of the ways you could, not the best, but one of the ways to solve the inflation problem would be to have people get laid off and to have fewer jobs, more unemployment, right? Because as people lose jobs, they don't have money, they're not getting paid, they can't spend money. You can't spend money, then prices fall. So strong labor market, strong employment numbers suggest that there is lots of aggregate demand, or some aggregate demand to some degree in the market. And if that's the case, then inflation is still a factor to be contended with. And that means that if inflation is going to continue to be a problem in the next quarter or two or three or four, then interest rates are going to have to go up to tackle that. So basically what people see when they see strong labor market data, they think, well, inflation's not going to be going away in the near term, so price in some more rate hikes. So that's how good employment data can turn into bad news in terms of future sentiment, in terms of
And it's also in
interest rates.
the same regard, it's that they can take it. The economy can take it right now. The labor
Yeah,
market's strong, the economy's strong. We can go ahead and raise interest rates and it won't be a problem. So there's also that factor as
that's
well.
right.
But both of them is that the good news is bad news is good news. And
Right, because the reverse would be true. Let's make that case. So if we got some bad news on the unemployment or on employment data, if the number of jobs this month were less than what was expected, that would be a sign that some of the demand pressures would be easing, and then maybe that the next rate hike would be 50 basis points, or a quarter of a percent, instead of a 75 basis point hike. So you can see how bad news could be turned in, and then that would be optimistic, right? You see labor market not so healthy. You mean that tells you that the easing or the rate hikes are going to come to an end, the easing will return. So you might start buying stock. You might put money into work at that point, thinking you found the bottom. So that's how bad news turns into good news. So it's really kind of counterintuitive, but it's all about just front running the central bank and what they're doing with their policy. That's really what it comes down to. And so to bring us full circle, that kind of brings us to the data for today. Recently, this morning around 10:30, some numbers were posted about the U.S. labor market, and the data said that the number of jobs created in July was 528,000, which I believe is almost double what the expectation was. I remember, it was not in this article, but another article, it mentioned, I believe it was a 250,000 or somewhere around there expectation. So this is almost more than double what the expectation was. Far larger than expected. To give you an idea, the data for the month before was around 398,000. So we're looking at 150 or more thousand jobs created than the month before. So it's very strong labor market data, and that, as you say, suggests that the economy can sustain these rate hikes, and it's not a drag on labor markets, right? And we're not in a recession, because you don't have, that's the other thing we should mention, is that if you have labor market expansion, hiring going on, and this kind of business investment in labor, and also in durable goods orders are pretty strong. So the demand for inputs is still very strong. That's inconsistent with a recession, because those are the things that get sold off and become idle during a recession. But if you have strong business investment, strong hiring, it's really hard to see how that is a recession. So yeah, good news on that front. But in terms of stocks and risk assets, this definitely is a negative in the sense that you can price in future rate hikes, probably throughout the rest of the year, maybe into next year.
And that's the idea, is that that we're still looking at being in the midst of rate hike season. So whether or not it's 50 basis points, 75 basis points, or whether or not we see more news come out, I could easily see a full point depending upon the information that comes out, what they think is
Yeah.
necessary. So there's still some time to do your own research, to be your own bank. If you're looking at getting involved in blockchain technology and crypto, we've got some playlists and some videos to teach you how to start a Web 3.0 wallet, just like an email address, or moving from tape decks to CD players. We've got it all. It's not financial advice, commercial advice, legal advice, marital advice. It's just educational, entertainment, information that we're just sharing some research in this well, it's been a digital age for a while, but this is like the new Web 3.0 digital age, the next layer, with NFTs and DeFi and decentralized data storage and all this fun stuff. And we've got privacy on blockchain and a lot of innovation. So beyond macro updates, we've got some crypto Neo to share. If you like that kind of stuff, like, subscribe, notification bell. It's much appreciated. And until the next time, have a beautiful day. Namaste, y'all.
Thank you.